All right, let's dive into the latest numbers from the National Bank of Kuwait. They just dropped their first half results for 2025. And honestly, it's a really interesting story. We're seeing some fantastic growth, but it's hitting a brand new wall. Let's get into it.
Okay, right off the bat, if there's one number you need to remember from all of this, it's this one, 7.8%. This is the big headline figure, right? The one that everyone's talking about. But to really get what's going on, we've got to dig a little deeper.
So that's 7.8%. That's the year-on-year growth in net profit, the bottom line. It's a pretty solid number, for sure. It means the bank's making more money than it did last year. But what does that actually look like in, real money? And here you go, you can see that jump right here. We're talking about a climb from 292 million Kuwaiti dinar to 315 million. Now, at first glance, that looks great, right? A clear win. But if you just peel back one layer of this onion, things get a little puzzling. Okay, this is where it gets really interesting. Get this, the bank's profit before taxes, that grew by a whopping 17%. So, wait a minute. How does a massive 17% gain just shrink down to 7.8% on the final report card? There's a big gap there, and something is definitely going on. And the answer is taxes. Yep, it's that simple. There's a new 15% domestic tax in the books, and you can see the impact right here. The bank's effective tax rate, so the actual slice of the pie they pay in taxes, it basically doubled. It jumped from around 9% last year to 16% now. That new tax is taking a much bigger bite out of their earnings. So even with that big tax headwind, the bank's core business was actually doing incredibly well. I mean, the engine underneath it all was just humming. So let's pop the hood and see what was driving that powerful 17% pre-tax growth. Okay, a few things were firing on all cylinders. First, you got strong growth in loans and investments. That's the bank's bread and butter, right? But second, and this is a really big deal, there was a positive swing in what they call provisions. Think of provisions as a rainy day fund, money banks have to put aside just in case loans go bad. Last year, they had to squirrel away 43 million dinars, but this year, the outlook improved so much, they actually got to release 10 million back into the business. That's a massive swing and a huge boost to the bottom line. And this right here shows you that diversification in action. It's the classic don't put all your eggs in one basket strategy. No single part of the business is doing all the heavy lifting. You've got profits spread nicely across corporate, international, and Islamic banking, plus solid chunks from consumer and wealth. Why does this matter? Well, it's crucial. It means if one area has a tough time, the others are there to keep things stable. It makes the whole bank way more resilient. All right, so that was the first half, a pretty strong showing. But what about the rest of the year? What's next? For that, let's take a look at the bank's official guidance. Looking forward, they're feeling pretty good about loan growth. They've actually raised their forecast. But they're also weaving a few yellow flags. They expect their net interest margin to contract. All that means is the profit they make between the interest they earn on loans and what they pay out on deposits, that gap might get a little tighter. They also think the cost of risk will get back to normal. So remember that rainy day fund we talked about? They'll probably go back to putting money into it instead of taking money out like they did in the first half. And the group's CFO, Sujit Range, really summed it all up perfectly. He called the outlook cautiously optimistic. It's a nod to the fact that things are challenging out there, the global economy is a bit choppy, but they're confident things will stabilize. So this all brings us to the big question, right? NBK has proved its core business is a beast. It's a powerful engine that can take a huge tax hit and still power through. But with some uncertainty on the global horizon, the real test is coming. Is their diversified model just a good defense, a shield, or can it actually be an engine for more growth in what looks to be a pretty challenging year ahead? That's the key thing to watch.